All right, folks, this is a short follow-up video to today's video about buy-ins into the $1 million portfolio. When I made my buys, I talked offhandedly about selling options to raise some extra income. And I figure it's a good opportunity to show you what I mean by that and how it can go sideways. So let's get to the computer, take a look, and we'll go ahead and do our options writing. All right. So here we are at the computer, and you can see that after my buys, I'm up to about 1441 shares in NASDAQ 100 QQQ. And with the remaining cash, I think I had 170 at the end of the buy, roughly. I just poured that into the short-term ETF, short-term treasury. So what I'm going to do now is I'm going to go to the options screen for the NASDAQ 100, and just to be safe, I'm going to refresh the price. So right now, it's trading at $306.17 a share. So it's going up. What I'm going to do is I'm going to look at the calls for the NASDAQ 100 that's going to expire at the end of market today, and see where they're going at. And I'm going to go look at all strike prices. Basically, what I'm trying to do is give people who are speculating on the NASDAQ 100, it's a very liquid issue, so people like to speculate on it. I'm going to give them the option to buy my shares, my 1,400 shares, at a specific price. And for that, they have to pay me a premium. And what I'm trying to do is I'm trying to pick a strike price where if they buy it from me, they have to pay me the strike price as well as pay me the premium. So as an example, if it's currently trading at 306.17 and I sell a contract for 307, it means that if they want to buy the 1,400 shares from me, they're going to have to pay me the 307 as the strike price. They also pay me 31 cents a share as the premium, the right to do so. So my decision really is between these two strike prices, because this is going to expire in less than an hour and 30 minutes, right? The market closes at 4 p.m. Eastern. So the pricing is currently in an uptrend, and my decision has to be, how fast is it moving up, right? How much risk do I have for this thing to go up another 78 cents if I were to pick 307 as my strike price, versus selling at a 308 and go, okay, that's $1.78 in an hour and a half. On a percentage basis, that's going to be like, another 0.5%, right, in the next hour and 26 minutes. So that's the decision. So where I screwed myself in the past is that I sold the daily calls very early in the day, and I was being aggressive with the strike price because I was looking to get, these massive premiums, right? And that gave traders, whatever the trading hour is, 6:30 Pacific to 1 p.m. Eastern is something like, 6.5 hours, right? 9 to 4, 7 hours, 9:30 to 4, 6.5 hours of market for prices to move and react to news or whatever. So the day that I lost my shorts was I was selling options very early at the open, and I was being very aggressive with my strike price to get, huge premiums, because if you're getting, $3 a premium on 1,300 shares, that's $3,900. And if it goes my way that day, that's $3,900 a day. Didn't quite work out that way. But given that I'm just trying to scalp the last remaining premiums here, so I'll refresh this again. You can see that even in the time that we're talking, right, the price have moved up from 306.22 a share to 306.45. So that option to buy at 307 has gone up tremendously, right? And the right to do so has gone up as well. So this pretty much makes my decision on what I'm going to do. I'm going to sell cover calls to buy my shares at 308 by market close, and they're going to pay me 15 cents a share premium to do so. So let's go ahead and do that. just so you can see how that works. And then I'll come back and talk a little bit about what this all means. So I'm going to do a sell to open. And I say 14 contracts or 1,400 shares because you have to do 100 share lots at a time. So these 41 shares that I have, they're useless. I'm going to take a chance here and do active or market orders, although usually I do a limit order on the options, but it's moving pretty fast. So I'm going to get about $182. So let me go ahead and review and get this order placed so that we have it executed. All right. The order is placed, it's executed. Let's see what I actually got. So I'm going to go and refresh. So now my QQQ has an option order underneath it. And I ended up getting a little bit higher than the 182. So I ended up, as my cost basis, getting $200, a little over $200. So whoever's holding the other end of this contract is speculating that it's going to get to 308 plus whatever they paid per share, right? So if it was 17 cents a share, they have to get a market price above $308.17 a share for it to be worth their while. And they have an hour and 22 minutes to have that happen. And I'm basically betting that's not going to happen. Now, if it does get called away from me, I will try to buy it back or close it out as quickly as I can and lose a little bit. But from my experience, if I have, an hour and a half, 2 hours to go, and this is the spread that I'm looking at, usually I'm going to win. And if I lose, it won't be too much. Where you can lose your shorts is if you give them a much longer time frame to call it away from you, right? So in this case, I'm pretty confident that I'm going to win out on this one. But that's basically what I do with selling cover calls. So when you're playing with options, it's very complicated. There are collar trades, there are, you can write straddles and you can do all kinds of stuff. You can do cash secure puts, which I've done in the past to raise extra income on cash that I'm just holding instead of putting it into short-term treasuries. So, in the past when short-term treasuries was paying like 0%, right? It made sense to hold $500,000 and write cash secure puts on something that you believe in long term, like S&P 500. People will pay you a lot to buy cash secure puts, and you can get juicy premiums way above the interest rate on short-term treasuries. Now that short-term treasuries are paying 4%, it's really not worth doing. It's too risky. So I don't do cash secure puts anymore. And I rather have my cash into short-term treasuries. But on my long positions, like the NASDAQ 100, I sell these cover calls on a daily basis. And a cover call basically just means that it's something that you're holding long. And you give speculators the right to buy them off of you at a specific strike price in a specific time frame. And for me, the time frame is 1 hour and 20 minutes and counting. Right? So they got to get that to 308 before it's profitable for them. And I'll watch this, off and on just to see if I need to close it out or not. But on something like this, you can get, $150 a day selling cover calls on something like the NASDAQ 100 pretty safely. It's when you try to go for the huge premiums that you're going to get screwed. But that's what I do, and that's where we are. The other things that I do is that I have these weekly calls on the long-term treasuries and the gold, and they seem to be working out for me so far. It's only Tuesday, but you can see that I wrote the calls for $100, a little over $100 on the gold, and right now the market value is 37, so I'm up on that one. Same thing with the long-term treasury. I sold it for 175, and market value right now is $52, so I'm up on that as well. So I can let it ride for the rest of the week, or I can close them out and take these short-term, gains. They're nothing to sneeze at. If you're going to get like $185, $86 in a day, that's pretty good, on these cover calls. So that's what I do for my strategy. Other people will look at it and be like, you're crazy. It's still very risky to do what you're doing. Yeah, there's a degree of risk there, but it's all within what you give yourself permission to do, right? So in my investment policy statement, I explicitly give myself the ability to write cover calls, not any other crazy option strategies, but just cover calls. And I'm good with that. So your mileage may vary, but it's definitely not for the faint of heart. There are other things you can do that gets more complicated, but I don't want the gambler in me to come out, because I can get pretty competitive, and it could manifest itself in a bad way. So we're not going to do that, and just do this cover call, and we'll see how it turns out. All right. Thanks for checking in on the follow-up video. I'll see you later. Bye.